Hello and welcome to the VRIC Media channel, where our mission is to educate you on how to make money in the commodity sector. I'm your host, Ted Butler, and today I'm glad to be joined by a very special guest. He's not only a thought leader and an industry legend, but also a mentor to me and someone I'm very proud to call a friend. In fact, if this man hadn't trusted me to be a writer for the Morgan Report when I dropped out of university a couple of years ago, then I wouldn't be in this position today. Of course, I'm talking about the silver guru himself, David Morgan. David, it's great to have this full circle moment with you and have you on. Thanks for coming on my show.
Great. Well, I'm very proud of you, and congratulations, and shout out to VRIC and Jay Martin and the whole Martin family. They've been very supportive of me from, wasn't quite your age, but I was a lot younger. In fact, I was your age when I started going to the VRIC conferences as an investor only and not, a newsletter writer. But thanks for having me. It's great to be here.
Thank you. Okay, David. So for today's interview, I want to talk about the belief that ultimately united us, which is that sound money, aka gold and silver, should be part of a diversified investment portfolio. Of course, for many of our viewers, we're preaching to the choir. They already know this. However, due to the fact that 71% of financial advisors still have zero exposure to gold and even less for silver, I do feel that we have an obligation to educate those who aren't aware, and whether that's the family and friends of our viewers, whatever. With that said, the first segment that I want to hear your thoughts on is this idea of precious metals ownership as protection against digital infrastructure risks. We just had a few days ago a global IT outage, which caused many people unable to get flights to where they need to go. And there are also many countries looking to trial CBDCs. So my question to you is, what is your understanding of the progress towards CBDCs? And how does this impact your bullishness towards gold and silver?
Well, there's 134 countries that are looking at CBDCs, so I think it's going to take place in a few of them, all of them. I think there will be a lot of more pushback than a lot of people think. But coming to the sound money thing, it's really important to understand that a lot of what's promised by not the CBDCs, a centralized digital currency, but the uncentralized crypto world that exists now is sort of the big lie. I mean, a lot of those are really not anonymous. In other words, you've got to be on some type of an exchange and give your KYC, know your customer, all the kinds of information, government ID or two government IDs and all this. And so basically, in a way, it's centralized because it's centralized from the aspect of the exchange that you use to purchase your favorite crypto. Are there ways around it? Yes, they're rather cumbersome. You got to be in the know. It's not easy to do, but it can be accomplished. But for the vast majority, you're centralized within that. So that's point number one. Whereas if you look at what the precious metals do, buying a silver or gold coin anywhere in the world is pretty much an anonymous transaction if you wish to make it that way, meaning you can take the currency de jure, be it British pounds, be it the euro, be it the Canadian dollar or the US dollar, walk into a coin shop, put currency on the counter, and come out with a stack of silver coins, a gold coin, 10 gold coins, whatever. And really, it's between you and the coin dealer. And that's no counterparty risk at that point. Whereas with the crypto world, there is some counterparty risk. I mean, it is peer-to-peer in most cases, but there's risk in what we just witnessed and you alluded to, the exchange going down, electronic problem, not being able to log on, missing one letter out of your key. I mean, there's a lot of things where you're holding a coin that's been money for thousands of years, and almost everybody worldwide understands that. It gives you no counterparty risk, a lot of anonymity, and a way to preserve your wealth that's worked in the past and will work.
Absolutely. And you touched on it before as well about, if you look at something like Ethereum, there's a human error risk there, whereas with gold and silver, it's exempt from that human error. I did want to sort of get an update on if you know about where the development of CBDC is progressing, in certain countries. Are there any particular countries where you see that it's developing faster than us? I think maybe in Africa or Nigeria, there was one trialed and it didn't quite materialize. There was backlash. And in the US, are you aware of any attempts? What's the latest, evolution of the SWIFT system? Is there anything you're noticing or observing?
Yeah, a little bit. It's not my forte, as you know, but As I said, 134 countries. I think there's only like 150 on the planet. So for all practical purposes, every country on the planet is looking at a CBDC. I think what concerns me even more is that the BIS has looked at it. If you look at Fed now, that's sort of a cover for implementing some type of CBDC system. I think the fact that the Congress has to approve a CBDC in the United States is actually something to consider, which means that maybe it wouldn't be centralized by the Federal Reserve, for example, because that would take a vote. It could be centralized by the Bankers Bank, not the BIS, but the Bankers Bank for the U.S., which is J.P. Morgan. So maybe J.P. Morgan would come out with a CBDC, and it was totally voluntary. But of course, if you didn't have it, you couldn't buy anything. So I'm very concerned about it. Nothing's come to the fore other than El Salvador, probably one of the leaders, and there's one, I think it was Saudi, but I may be wrong. Maybe that adopted it and kind of have backed out of it too. So there's still an adoption process that's going on that it's really not in instances all it's cracked up to be. It's not as maybe it's not even as secure as it's touted. And I'm not, I try to be neutral on this stuff. I mean, I'm not really that fond of Bitcoin for a variety of reasons. And you and I both wrote our opinions in the paid version of the Morgan Report that month, April this year. And we don't have to address that, but nothing beats real money. And putting real money on the blockchain, I think, is probably an avenue that we'll see more and more of. And I think as we deteriorate with the financial system as it exists now, being able to print wealth, and you can only print it for so long, and then people understand it's not worth anything, will really be an advocate for people moving, maybe not into the physical gold and silver world, but the digital gold and silver world. And I think we're going to see more and more of that. So that's kind of my take.
Okay. Yeah, sure. I want to move to kind of the banking sector now. Similarly to the sort of CBDC theme, we've had people in the UK like Nigel Farage, who's just become an MP here, phased out of the banking system, unable to access his bank and his money. What sort of risks do you see the banking system posing today? And do you think that there is more fragility in the banking system than the mainstream media leads us to believe, with derivatives exposure and things like that? And does that strengthen your case for gold and silver?
Certainly it does. And the banking system is unbelievably fragile right now. I mean, there's 65 banks in the U.S. I'll be doing this on our mastermind series probably next week that are really, from all reason, ready to fail. They're insolvent. And the problem with the banking system, as most of us know, is they're all intricately interconnected. So you could have a somewhat solvent bank, but maybe you've got a derivatives exposure on an interest rate move and it moves against you. And then all of a sudden you're protected because you paid the money for that derivative, that option, that if interest rates go this way, even though you made a bet the other way, you've hedged, but the counterparty cannot make good on that payment. Now all of a sudden you go from solvent to insolvent instantly. Well, now the bank that's connected to that bank that expects you to pay off on your side of the bet can't be done. So this thing is much, much more fragile than anyone other than those, at the top tier that really understand the risk. No, the leverage is so extreme that, very slight move can have huge repercussions because of the leverage. And this is the reason that you really want to put yourself on your own alternative. It doesn't have to be with all your wealth. It doesn't have to be 100% of your money. 10% is probably plenty, but you really want to be ahead of the curve. You want to be in a position where if there are bail-ins, which I think are coming, that you have provided your family, yourself, your business, your whatever, your corporation with something outside the system and can be, ready cash if it's needed. And I know that sounds extreme, but the extreme times demand extreme action. And I just see a lot of people for so many years that just kind of wait on the sidelines and look at interviews like we're doing together as entertainment or an infomercial. We're dead serious about it. These things are imperative, especially, the old adage, I'd rather be 6 months too early than 6 minutes too late. Because if the banks close next Friday and you can't get at your assets for 2 weeks, you're going to wish that you had that, small stack of precious metals or currency or both to be able to conduct your affairs outside of the normal structure.
Yeah, staying with the banking system as well. I'm currently writing an article about China for the Morgan Report, actually, and particularly with regards to the banking system. And what I'm observing is this wave of consolidation, which is also happening in the solar manufacturing industry. But basically, the small banks, the regional banks in China, are being absorbed by the larger banks as China becomes increasingly centralized amidst Xi Jinping's overarching reach. Do you see a similar trajectory for the US where the regional banks continue to collapse, continue to get absorbed, and then we just kind of have this oligopoly of the big four, who I believe have 80% of the derivatives exposure in the US?
No, exactly. Well said. That's exactly it. You'll see more and more of the regional banks picked off due to this commercial real estate crisis, where a lot of their, loans have been at higher valuations than the market's current price, and they're going to have to, take the loss. And in some cases, those losses will mount to the point where the bank's insolvent and they're taking them. And that's going to be across the board. And anyone that understands, gaming theory or, basically just how the world works. I mean, the last thing you want is one point of failure. I mean, if you have one central bank and it goes down, that's it. What you want is mass diversification. You want a bunch of regional banks. You want, the internet. You want, servers that, all over the place. So if one server bank goes down, that's not a big deal. There's, thousands behind it. So the system could stay up. And that's what you want in any system. And of course, more in probably any other system in the banking system. And that's not the opposite's taking place where it's consolidating more and more. Will it get to one bank? No, I don't think so. But it could get to where there's so few that taking out one of those takes down the whole system because they're so interdependent, as I said earlier. And consolidating the bank makes it makes it more fragile than having it with its broader diversifications.
Absolutely.
It's a sad thing, but that's the way it is.
Yeah, sure. Staying with banks again, in terms of, I recently saw something the other day, JP Morgan, US head of investment strategy, Jake Manukian, recently stated that clients have around 30% of their portfolios in cash, up from an average of 25% when interest rates were at zero. Now, as you well know, we're on the brink of what is looking like a Fed rate cut in September. So my first question is, what do you think that will come to fruition? And then secondly, how much money do you think will need to come out of cash, from the sidelines into gold and silver for us to see a meaningful price increase? Surely, maybe 1% or not even that, can you quantify that, do you think?
Yes, I can. So, I agree with what you just said. If you look at how much cash is available, Tavi Costa did an interview, probably been about a year ago, and he talked about this 5 trillion that's kind of sloshing around. If you take 1% of that, that's 50 billion. That's only 1%. 50 billion is 2 times the entire silver market. Silver market right now at $29 an ounce is a $29 billion market. At the time he wrote that article, it was about $25 the ounce. So $25 billion is the silver market for 1 year, all mining and recycling combined. 50 billion is 2 times that. So if you don't think that 1% of all this money would flee to a safe haven like silver, think again. So this is just 1%, but if we really get a scare, we might see something like 5%, 6%, 7% move into the metals. And if that were the case, you could probably put a paper price on it. And especially if it's in a panic mode like we saw, or I saw in the late 79, 1980 period, it didn't last very long. but you could feel the panic in the air if you were in the metals at the time. And even as a somewhat objective observer watching the financial channels at that time, which were few and far between, nothing like we have now, what you could hear the commentators being kind of perplexed and nervous at the same time. You know, my gold keeps going up every day. Like, why is it? They didn't know, but they knew it was. And more, you know, calls are coming in. What's happening to gold? What's happening to silver? Why silver's acting like this? And those kinds of questions. Well, it was because of fear of currency failure.
Right.
And the reason it didn't fail was several, really, but one of the main ones was Volcker was so powerful in his convictions that he came in and put interest rates well above the nominal rate to a true rate that was above the real inflation rate. And because of that, it basically killed the precious metals markets and put the dollar back on sound footing, more or less, and away we go again. So this time, that can't be done. The bond vigilantes are starting to appear a little bit again. And on top of that, the bond traders might, you know, make some juice when the interest rates are lowered. Will it happen in September? I doubt it. It will happen eventually. But I think it'll be too little too late. And I think gold has already sniffed this out. So when the interest rates start coming down, it's an obvious signal that the Federal Reserve, the banks globally are giving up. And they're saying, we're just going to print until you people are wise up to the fact that this stuff isn't worth what the paper is printed on. And the people that know that in advance will start pushing the price of gold and silver higher and higher. And then the public will catch on later in the game saying, why is gold and silver rising? It's because the currency is being destroyed for the last time. And am I, you know, right or wrong on that statement? I'm correct longer term. Could it have a couple more iterations? Possibly. But everything I've studied has indicated this could be, I'd say would be, but could definitely be the last time or very near the last time where you can stimulate the economy by lowering interest rates. Well, you're stimulating the worthlessness of the dollar. And that's what's really going to take.
So in that sense, then, do you believe in a sort of environment characterized by higher interest rates for longer? Like after there is a cut, do you think we'll return to higher interest rates for longer? Is that what you're saying, or am I misinterpreting?
No, I don't think you could get the higher interest rates for longer because the system would collapse. You wouldn't be able to do the debt service on the national debt. I mean, right now it's about 75% of all tax receipts. So if you put the interest rate up to say 10%, mathematically, you couldn't, you know, you wouldn't even be paying the interest on the debt with all the tax receipts. So we're in a position where all fiat gets, mathematically, it's impossible to pay off this debt. You can't grow your way out of it. We have limitations on how much energy we can, you know, make and what the costs are. So there's a point of no return. We crossed that some time ago. It's just the markets haven't realized it yet. So they have not manifested in a reality check where some of these high-tech companies that haven't made a profit in a decade continue to, you know, fly to the moon because they're a popular stock with a huge backing and a great story. But the reality is they really don't provide, they're mispriced. The valuation is not accurate. It's not commensurate with what's actually provided to the physical economy. So we're going to get to a point where we're going to see a correction, I think, that's above and beyond what most people expect, because reality does set in at some point. And the real worth of some of these corporations are not what's being displayed on their stock screen at the current time.
Absolutely. And I think we wrote about this in a Morgan report edition about the overvaluation of tech stocks and the concentration of wealth amongst the Mag 7. In terms of mining companies, how close do you think we are to that real rotation of capital coming away from the big tech stocks and towards mining companies? I think it's been long awaited for many years, it seems, as people have been chasing these, you know, momentum gains and this speculative boom, which is very similar to the dot-com bubble, which we observed. And you know, names like Cisco, if you actually trace the NVIDIA chart and Cisco and you look at it's very similar. So how close do you think we are to this rotation? Do you think
We're
on the
very
brink of
close.
it?
I
Yeah.
mean, I think we're there for all practical purposes. I may be off by 6 months. I don't think I'm off by more than that. And the real value, if you look at earnings, I mean, you look at some of these gold companies with gold at 24.50, and they're all in sustaining costs at 18.50. They got some pretty good margins going.
Yeah.
And once the algos, the stock sorters pick up that who's got the highest earnings, and a couple gold miners pop up, you'll see some money come into that sector, and it'll feed on itself as the currency starts to be destroyed more and more, especially if they decide to lower interest rates about the same time. So, I'm so bullish on the metals. I mean, it's not a cure-all, end-all, be-all for everything.
Mhm.
We look at the financial aspect of people's lives, and we want to inform them of the reality of these markets and to be ahead, not behind them. I mean, it's really great to be with the herd because you feel secure, and your neighbors are all on NVIDIA and you are too, and you're making money and life's great. And, people like you and I, these naysayers, don't know what the heck they're talking about. And that looks like the correct place to be with the herd at a certain point in time. People don't realize how leaders really work, and the leader's the person or persons, but usually an individual that will take off from the herd and say, wait a minute, man, I'm not going off that cliff just because the government tells me to. I want to save my life. I'm moving out of here. And they
Mm.
walk away. And then another, member of the herd says, you know what? I think he's right. And, all of a sudden there's two and moving away. And then there's three, and then there's 10. And then that becomes a movement. And
Mm.
that's the unforeseen, flock of geese or birds flying in one direction and changing out of nowhere to another direction. That's a metaphor for what will happen once the shift comes between what's real and what isn't. We're basing everything on algorithms and ideas and, let's say, almost financial entertainment shows that proclaim that there's nothing to it. All you have to do is have a computer in your basement and trade stocks, and you too can become one of the chosen ones. And that doesn't fit with the actual reality of life, of how there are difficulties in life and you do have to earn things for the most part. And without that knowledge that will be bestowed upon everybody at some time in the near future, we will have a reality check that will be a wake-up call, probably well beyond what happened in 1980.
Mm. No, it's very interesting. Yeah, in terms of continuing on the gold and silver sort of spiel, another thing that I wanted to ask you about is your opinion on global conflicts and potentially even civil war in the US, which Ray Dalio, a very prominent economist, said that there'd be a 50% chance that the US goes to civil war. Of course, this plays into the hands of gold and silver, but are you observing anything in these global conflicts or even in the US in terms of a civil war that these tensions are going to persist, or do you think that a Trump coming in would manage to quash these tensions and somehow kind of negotiate global peace? Or what are your thoughts on that?
Well, a couple. One is, would Trump be able to mitigate some of this? Possibly. I mean, I wouldn't rule it out, but I wouldn't, bank on it either. But I think there's a bigger philosophical question, and that is, sound money, sound principles, and trust. I mean, when you have sound money system, there's a direct correlation to liberty. I asked David Smith to write a sequence on it for the Morgan Report years ago, and you can do the research yourself, but there is a correlation between a trust that's pervasive throughout society, where you have a higher moral structure, more happiness, more freedom, and more just well-being throughout the whole social climate in all aspects. I mean, from better food, more care, more pride, more love, all that. Whereas once you go to a completely corrupt system where the value is indeterminate and people are chiseling off each other, and then you get in the inflationary mode where you've got to raise your prices, because if you don't, you're not going to be able to afford food on the table. And that spiral continues until the trust is almost zero, till the trust in the currency evaporates, or enough of evaporation where there's a disruption in the whole supply chain, meaning, what you buy at the grocery store, and, if you could get an auto loan, or if you can afford a house, or all these things that we're seeing come to the fore right now. And then the system has to basically reset. And the one thing that very few of us talk about is the possibility of the bankers losing control. And when we talk, well, the CBDCs right there, 134 countries are looking at it. The BIS is behind it. The Fed now is kind of a precursor. It's kind of a test run that it does work and all this. And then, if they collapse the system, well, you have to get a digital ID, come back on board, prove who you are, who you say you are, get a universal basic income, and the system resets it and moves on. Well, those are all scenarios that many of us have thought about and are likely, but they're not guaranteed. We could get to a point where the banks fail and they can't restart. They can't reboot. And that's something that's very seldom discussed, very seldom thought about, and a reality. I mean, in the 30s, there were a lot of banks that closed out that never came back. And I had a discussion with somebody about 2 days ago, Ted, and his grandfather or great-grandfather had enough money in his bank to pay off his farm. Well, when the bank failed, he couldn't get to his own money to pay off his farm. So the bank, or the other bank that took over that bank, called the loan. He couldn't pay it, and he lost not only all his money, but his farm. And yet he had the money to pay it off, but he couldn't access it. And this is the situation with these bail-ins, and people don't take them seriously enough, in my opinion. That's the setup. Will it happen? I think it will. Can I prove it will happen? I cannot. It has taken place during the Cyprus event, in the case where you've lost your money because it's technically the bank's money, and they issue stock in their enterprise. You got about between 5 cents and 8 cents on the dollar. So you lost over 95% of your savings in that institution. That's very, very sad. But that's what we could be facing, and I think will be facing in the not too distant future. I'm not trying to scare anybody. I mean, me, people listening to me may not. Oh, that guy's just, a Cassandra, naysayer. Doesn't he see what NVIDIA did yesterday? He's so far out of it. But people in our genre usually are seeing the future, or you can almost call them prophets if you want. And I don't consider myself a prophet. The idea is it's not that hard to look. As Mike Maloney says, if you want to see the future, just look far back in the past. And if you do, you got fails. There's no exception. So there's no exceptionalism of the United States that makes this currency bulletproof, that it's going to keep going forever. It won't.
Well, just on that topic there, those are really interesting thoughts about the end of empire. How long do you think the US dollar will take to decline and for another empire to rise up? Obviously, the British Empire was the one previous to fall before the US, but it's still going somewhat strongly, but not too strongly. Which one do you think will take on the mantle? Do you think it will be China, the BRICS, or do you think it will be a completely different country like India or Saudi Arabia? Who are you tipping to be the next global superpower?
Yeah, I think it'll probably be the BRICS initially, and then I think out of that it'll become China.
Okay.
That's what I think at this point in time.
Okay, fair enough. Yeah. But, obviously we spend a lot of time talking about almost like not complaining, but just outlining the problem. What is the solution to this mess that we live in, which is this sort of geopolitical fragmentation, mismanagement of government budgets? What is the solution? I mean, how can we, speaking as a 23-year-old, what can we do to bring about positive change?
Well, I think the only way to solve the problem is to truly state it succinctly and understand it. So that's based on education. So you're self-taught, you know what I know. I mean, I got my degree in finance, but whoop-de-doo, it's almost meaningless. So you have to have the reality. So you have to educate yourself. And then it's self-responsibility. I mean, the whole idea, I just did an update on the weekend. I do the weekly perspective, as you know, and I talked about the differences between a constitutional republic and a democracy. And in a constitutional republic, it's really self-responsibility, but your rights are protected at law. And so as long as you adhere to the basically two laws, do everything you say you're going to do, and don't steal from anyone else, that's it. So that's what's needed, and that's where we need to go. So you have to, first of all, know what the problem is, and that no outside source is really going to solve it for you. No political, now how good they sound, and some of the actions they take may be in line with moving the pendulum the other direction, but the real responsibility comes back to you being self-responsible and taking on what you can control. Control, what kind of job you get, or control business that you start, or maybe raise capital on your own among friends and family, or do a crowdsource, whatever. There's lots of opportunity. And really, during the Great Depression, there were a lot of millionaires that were made just because they determined what was needed and they filled that need. And that whole scenario will take place again in the future. And in my opinion, they hadn't asked me, but you're asking for my overall thoughts. There'll be a lot of cryptos that don't solve the problem, that will diminish in value because they really are nothing more than a cute name and a following, but really they don't solve a problem. Whereas those that do solve a problem will probably do well. Kind of like the tech wreck. I mean, Yahoo went down and Amazon went down. And I mean, a lot of these things went down with the whole tech wreck, but many went off the board completely, never to come back. But your Amazons, your Yahoos, and many others that had real substance came back, and you bought the bottom and you could have made a lot of money when they came back up. I think you'll see something similar in the crypto world. I don't think it's had the washout that it probably needs, and it may not happen, but knowing markets like I do, I think we will see that.
Not good news for my generation, who's very exposed to crypto, but I tend to side with you on that one. Obviously, I want to talk to you about silver quite in depth because you are the silver guru, of course. I guess I'd like to know where you think we are first from a technical perspective. We had Peter Kraut on about a week ago when the silver price was about 31. It's since come down to $29. So first, I'd like the technical perspective, and then after that, you give me your thoughts on the fundamental side. Are you seeing any catalysts at the moment on the exchanges that the supplies are more depleted than usual, or do you think the Fed rate cut will be the catalyst that pushes silver up to 35 and beyond, or what are your thoughts on that at the moment?
Well, so technically we need to get probably above 32 or so and maintain that. And once we do, then it's pretty much not a hard climb to get back up in the 50 range. But we've got to break through and establish a new base, and it's pretty much been established. I think 28's probably it. It could go to 26. I doubt we'll see anything lower than that. But and gold is making nominal new highs, but not by much. So I think we're in a trading range. Gold will probably break through. We'll get into maybe the 3,000 level by the end of the year. Silver will be wherever it's at. I think it could be at above 32, and then into 2025 we start breaking into the nominal new highs for gold and working our way up into the old high in silver.
Yeah.
So that's what I'm looking at technically. On the fundamental side, it just gets better and better for silver. The industrial need for silver, with really nothing to substitute for it, puts it in a position where we're going to have these 250 to 400 million ounce deficits probably for the next several years, which the above ground supply will go from 2 billion, maybe 3 billion ounces to almost nothing within a decade. Now that, presupposes that the analysis I just indicated is true, and that the industrial side demands that much for photovoltaics, AI, electric vehicles, all the electricity and electronic things that exist, plus the war takes a lot more silver as well.
Yeah. Do you think you could speak on that? I mean, I know it's a bit of a taboo topic for some, but
yeah. Well, there's only one place there. They used to speak about how much silver was needed in the military. And that was, when I was just getting started in my quest way before I wrote, anything in the Morgan Report. But Henny and Hardman and another source used to put out a little bit of a wag, a wild ass guess on how much silver is used in the military. But that's been obfuscated for decades. And so now when you see industrial demand and you see like, silver solutions, silver in, wire and mesh and all these other solder, fabricated products for the industrial side, that washes out what the military uses. So you don't have really a good feel for it, but we do know it takes a great deal of that silver.
Yeah.
And we know during the war, when you blow up a torpedo or, whatever, that it's going to be replenished. So more silver is in demand. Most of your mil specs demand high quality, bulletproof, more or less, scenarios like communications and all kinds of things, from weapons to communications to, solar packs that are out in the field to generate electricity to, conduct communications, for example. So there's a lot there that goes into the military. We just don't know what the number is. We do know it's growing. And because it's growing, that will put more demand. So are they burying some of that and, the numbers for photovoltaics? I can't tell you. I think they're mostly buried in, as I said, these very specifics as far as, silver, mesh or silver paint or silver, liquid.
Well, I think because I wrote the silver chapter for the Inglewood Trust Report, and when I was doing the research looking at the Silver Institute's numbers, which I appreciate, it's a huge task.
Yeah.
But what I was saying was it would be great if there was a line where it shows military, but of course they're not going to do that. What it actually is within, I believe, is industrial. It's not explicitly mentioned as military, but it's just within industrial and within other, brazing and alloys, and it's very hard to actually identify. But no doubt, all these wars that we're waging are consuming more, and it doesn't seem like those wars are going to stop anytime soon. But that's silver for now. What about other metals that you're observing beyond gold and silver? What are your favorites? I know we've talked about platinum in the Morgan Report. I've done articles on copper, uranium. Which would you say is your third favorite metal right now from the perspective of investing?
Well, I'm biased. I'm biased, and you know it because you've helped me. But we've written about platinum quite a bit, and it's done nothing really. But we are in near the bottom. Pretty convinced of that. So it's a low risk entry point. Whether it'll come to the fore or not remains to be determined. But since 70% of the market or thereabouts comes out of South Africa, and South Africa has so many problems with their energy and their political situation, and what's going on in the platinum mines because they're producing it at a loss in many instances. I think it's still a pretty good setup, but I would say platinum probably third, with a very close third being copper. I mean, I've become more of a copper bull than I was. I'm not still as much as bullish on copper as I am gold and silver, but still, even as a monetary metal. I mean, I'm going to digress for a moment, but while I was over in, Scandinavian countries, I went to the Monetary Museum there where one of my friends, Johnny Melgren, showed me, took me to the museum, and everything was done in copper. Copper was the money. And of course, these great, big, huge copper plates. And of course, it's pretty hard to make a transaction with, but they, put them in a bank and, did a bookkeeping entry. And, part of that copper plate was exchanged between you and I for our groceries or whatever. But it was interesting to see a copper standard. That's the only one I'm aware of. I mean, I am a student of monetary history, but I certainly don't know everything. But that was fascinating. So, said all that to say, could copper be used as a monetary metal in the future if things really go crazy? And the answer is it's possible. I'm not saying it will. It's a possibility.
Interesting, yeah. And uranium? I wrote an article.
But we love uranium, as you know, and that's really where our portfolio is doing the best. We didn't have any huge bets on the uranium sector, but we had a few that did 500%, that type of thing. I'm really thinking we're probably at the top for a while. I know people don't like to hear it, but they do want to know when to get out. I mean, you only buy because you want to make a profit. So I think that uranium's probably about where it's going to get to for a while, personally. But I do like it. We have it. I think we've got 3 entries in the uranium sector, and they've all done pretty well.
But that's the thing. Even if it does stay where it is, the uranium spot price, there's still a really healthy profit margin to be made with some of the producers. I think it's $25 per pound they have as an all-in sustaining cost. So, it's huge profit margins there.
It's tough on the stocks, as you're alluding to, because you can hold the stock and then, you're in that business and you have a profit margin and the earnings come and people see the earnings and say, oh, I'm going to buy the stock. The stock price gets pushed up. So, what I've told our readers, as you remember the team, is basically keep a tight stop on it. Don't let it lose more than 15% because, you got a 500% gain. Don't watch this thing come all the way back down, to where you bought it. So that's probably the best thing to do. And if you had all 3 of them and a stop on all of them, you might get stopped out of one position, the other 2 keep going, that type of thing.
Yeah. Okay. One of the things I wanted to finish with, which we spoke about, is if you were 23 years old like me and you were looking around the world for where freedom has the best chance of being upheld, this is a topic that I want to ask all my guests, really. Where would you go? And would you even consider the US?
Oh, boy, would I consider the US? Yeah, I would. I would also look for states' rights to come to the fore, where maybe the Civil War hopefully never happens, but where states just basically absolve themselves of the District of Criminals and say, no, we're going to the state constitution. At law, from constitutional law, we're really superior to you. You changed the rules and made a fictional state within a state and put us in your federal jurisdiction. We're absolving ourselves of that. We're going back to states' rights. And if that were the case, I would definitely consider the United States. Outside of that, I'm not that familiar with Europe, although I've been there many times. More familiar with like a Uruguay, Paraguay, maybe, El Salvador, maybe. I don't know enough about it. I know a lot of the Bitcoiners love it. But I would think Uruguay. I had a friend from Germany that stayed there for many years. He liked it. Argentina, when I was there, there were parts of it I thought were really, really felt free. I mean, the people were happy, fresh food. I mean, they go to the market every day, felt safe. I haven't been there in years, but when I was there, I really liked it. So I think there's some opportunities in South America. I'm not sure I would be in a really big city like Medellin, Colombia. It was beautiful to be there, but there's too much crime, like any big city. But out in the outskirts or out in the country, I would definitely consider that climate. I mean, it's 70 degrees year round. I mean, it varies like 4 degrees the whole year. You don't need an air conditioner or a heater. It's just that mild. So, that's where I would look if I was young. I would definitely, maybe even Central America, although I have a pretty good number of friends, probably 5, 6, 7, maybe not 10, that have been in Central America, and almost all of them have come back and exited out. It's beautiful. There's good food. The restaurants are pretty good, but there's just it's cumbersome. When you want to get something accomplished, the carpenter comes on Tuesday, but then he leaves and doesn't come back for a week and doesn't tell you where he's been. And it's just a lot slower pace with a different, what I call, different attitude you have in the States where everything's done now, done right, done fast, that type of thing, which is maybe too pushy. But on the other hand, you go the other side where you just get so frustrated because you're not able to accomplish your garden, your add-on, your repair on your car, or whatever in a timely manner. I'm not trying to put down anybody. I'm just telling you my experience. No. And they just get frustrated to come back to the States.
That's good points. Yeah, I mean, I just got back from Montenegro. In Europe, I think that's quite a good country in the sense of low taxes, Beautiful weather, beautiful country in terms of the views and the nature. We went across this lake. Anyway, I digress.
Well, I have to interject and show my sense of humor, lack thereof. But some of the Eastern European areas have got these small countries, and they've got a lot of beautiful women over there. So, if I was your age, I might take a vacation. A lot of these things you can just take a 1 week or 10 days or whatever. You get a pretty good feel on the ground. I'm getting an Airbnb and maybe get 2 or 3, and walk, or and you can get a pretty good feel. So there's some real gems that are just quiet, peaceful, serene places, but you got to hunt them down. They're not, they don't advertise, hey, come here. It's peace and quiet.
That's absolutely true. Yeah. Okay. I think we'll park it there for today. There anything you wanted to talk about with regard to your documentary, Silver Sunrise? I know you're working hard on that. And then also your links as well. You can let the audience know where to find you.
I think most people know where to find me. I will say on the silversunrise.tv, go to the URL. It was down for a while, so if you tried it and you didn't go to the site, it's back up. Silversunrise.tv, get on our mailing list there, and you'll get our progress reports as we are continuing to film and make this documentary. So we're pretty close to having the last 3 or 4 maybe interviews accomplished, and once that's done, the movie is going to go into the edit mode, which takes months, but it'll be accomplished. So hopefully it'll be premiering in 2025. So we're well past the halfway point.
Exciting. No, look forward to it. All right, David. Well, thanks for coming on again. Always welcome to come on in the future, and have a great day. We'll be in touch, of course.
All right, Ted. Thank you.
Bye-bye.